It's March 7, 2014, current time 11:24 GMT. Jay Meisler here from GVI Forex at global-view.com with a daily Forex market update. This is the day after. Now the focus shifts to non-farm payroll and U.S. Employment report. This time yesterday, the debate was whether the ECB would ease in some way. Credit to my partner John Bland, who said there's absolutely no way it would happen. Price action afterwards suggests there were quite a few betting on some sort of ease by the ECB, and with Draghi showing no currency concerns, the level of the euro, he gave a green light to buy the euro and sell the dollar. You know, markets like these green light trades, and given the resilience of the euro and market, probably a good portion of them still short. Here we go. We blasted higher, and I'll show the charts in a second, but we're at a key level. One word about today, how the market closes today, and I said this at the beginning of the week, is very important. Next week's a very light data week, so how we end this week will determine to a certain extent how we go into next week. And at this point, the dollar's on the defensive. One word about politics. Ukraine continues to simmer, but not a market factor. From what I read today, maybe the game plan seems to be that Crimea might vote for secession into, assuming to align with Russia. How that plays out, I'm not an expert, but just that Crimea is, Ukraine is still simmering below the surface. As I said, although not a market factor, something to keep in mind. Now, as I'm talking right here, euro dollar is at that 138.94 level, which is the December 27th high from last year. And we are just, it's inevitable we're going to test to see whether it's there are stops or what lies there. If you look at the monthly chart, and this is something I've been pointing out since last month, there's kind of like a wedge here, I guess. And I have it at 138.60, given these monthly charts, you could be off by 20, 30 points on that. So whether it's 136.60, 70, 80, 90, it's not important. The fact that it's testing that level right now, if we break above it, there's very little, as you can see, at least on a monthly basis, there's very little above the market. Now, if you look at the weekly chart, again, we are just flirting, we just broke actually that 134.94 level. And if you look at this, really nothing on this chart until around 142.40 or so. So we're in that zone 139 to 140, which is going to be kind of a battle zone, with 140 being that pivotal level on top and a tremendous psychological level. Technically, there's nothing to 142.40. So I guess what you do is you just get right now we'll make the market 138.50 to 139.50. If that's the case, at 139 is kind of going to set the tone. The market will maintain a bit above 138.50 and 138. The question is, does it need to dip first before it goes higher? As I said before, corrections that happen early in the day tend not to last, which now brings us up to non-farm payroll. How's that going to play out? The whisper numbers now are probably, and some forecasts have been marked down. I saw one marked down from 145K to 125K, another one down to 135K for non-farm payroll. So if there's going to be a surprise, maybe it'll be on the upside, not the downside. Normally this would be a number that would be a win-win for the dollar, but probably not in this environment. So how the market reacts to the data will be important. I would suspect there are probably, at least in case of euro dollar and maybe some other currencies, dollar offers, euro dollar bids resting below the market, hoping for some sort of a dip to get it. Stronger support's probably in 138 figure to 50, but if it maintains 138.50, it's going to have a strong bid, and 139 would need to become support to go after 139.50 with an eye at 140. So we're seeing these breakout days. We broke out through 138 yesterday and 138.25, which is another one that was the former high, recent high. So 138.25 would be a pivotal support as well. So on the day, non-farm payroll is a roll of the dice. I hate playing roulette in this game. So you sit back, let the dust settle. but I just said there's a better chance that an earlier correction will not follow through than a late in the day correction where the market has trouble absorbing those flows. But in general, there should be dollar offers lying in wait. That would only change if we get below 138 on the euro. And if you look farther ahead, and I saw one analysis which is worth mentioning, is that one analysis who was bearish on the euro along with a good part of the market this year said dollar strength may not emerge until after, somewhere in the second half of the year, when the market starts looking ahead to when the Fed may hike rates. As long as there's no expectation changing of when the Fed might hike rates, which is in the second half of 2015, that's not going to provide the dollar with any support. That would be needed to give the dollar support. Okay, one thing, if you look at the bottom of this chart, you'll see a sign for free signals. Free news. There's a great offer for an audio squawk box and a free news from Talking Forex. If you click on it, you'll go to a member benefits page. If you join in, you'll get access to that free news. So it's worth taking a look and signing up. Otherwise, that's it. Watch 139, 38.50, 138 and a quarter on the downside, and the upside 139 is a bias setter. 139.50 is the next level in the absence of any 139.20, 50, 80, and in the absence of any significant resistance ahead of the pivotal 140 level.